Hello everyone, here are the latest market news on November the 7th, 2019. Oil rebounds on fresh hopes for U.S China trade deal. Oil prices rose on Thursday amid new hints from China on progress towards a trade deal with the United States, offsetting downward pressure from a huge increase in U.S. crude stockpiles. Brent crude futures gained 33 cents at $62.07 a barrel. West Texas Intermediate crude futures rose 37 cents to $56.72 a barrel. China's Commerce Ministry said on Thursday that while Beijing and Washington still have to agree to simultaneously cancel some existing tariffs on each other's goods for both sides to reach a Phase 1 trade deal, they have agreed to cancel additional tariffs in different phases. Two former Twitter employees accused of spying. Federal prosecutors accused two former Twitter employees of spying on behalf of Saudi Arabia on Wednesday. Ali Al-Zabarah, a Saudi national, and Ahmed Abu Amo, a U.S. citizen, used their access at the social media giant to gather sensitive and no public information on dissidents of the Saudi regime, the Justice Department alleged in a criminal complaint. The case unsealed in San Francisco federal court. Under sources' allegations, the Saudi government tries to control anti-regime voice abroad. It also recalls a move reportedly directed by the country's controversial leader to weaponize online platforms against critics. SoftBank stock falls after terrible earnings report. Shares in SoftBank fell as much as 4% in Tokyo on Thursday after the company reported worse-than-expected losses for the third quarter. Japan's broader Nikkei was mostly flat in afternoon trade. South Korea's Kospi index declined 0.1%. SoftBank reported operating losses of $6.5 billion after market close on Wednesday, weighed down by a massive hit to its tech fund. The Vision Fund has been hit by big losses in portfolio companies such as Uber and WeWork. SoftBank founder and CEO Masayoshi Son admitted that he turned a blind eye to governance problems at WeWork and said he learned a harsh lesson from the office-sharing company's botched IPO attempt. IMF warns that Europe's economy is weak. In its new regional economic outlook for Europe, the IMF points out that growth has slowed this year. That's mainly due to weaker trade thanks to the U.S. China tariffs and a slowdown in factories this year. It only expects the Eurozone to grow by 1.2% in 2019, down from 1.3% previously, and by 1.4% in 2020 and 2021, down from 1.5%. The fund also warns European leaders to prepare for the next crisis and boost spending where they can.